All right, let's learn how to make some money with going back to basics and with something called structure. So of course this is an interesting chart. This is not Japanese candles at all. This is what we call Renko bricks. It's a price action bricks, price based bricks, not price action bricks. But you are able to identify price action much more clearly with Renko bricks, in my opinion, over candlesticks. And they take out the noise of the market. They take out the worry, the emotion, and it's actually much easier in trading. So let's get to this situation right here. All right, folks. So I do have one indicator on this chart, and it's a peak high, and I have a peak formation low indicator, which lets me know where the trend is going. So technically, if you're able to catch the peak formation low, which is down here, hopefully you can see my screen. Let me see if I have any type of annotations on this thing. I'm not for sure. Let me see. Probably not. But anyway, if you're able to catch this peak formation low and ride to peak formation high, let's see how many pips that technically would have been. And got it over here. This is gold. Would have caught in about 148 pips. No, this is not even gold. This is US 30. So, understanding structure. One thing I like about the Renkos is that you can clearly see structural levels, and understanding structural levels. Let's see right there, you are able to make some nice moves in the market. I particularly don't like to have as many horizontal lines on my chart as possible as this here, because having a clean chart to me is always the best way to trade. So being able to see levels of support and resistance, you're able to identify once the market comes back to retest a level or even breaks through a level, you can catch that particular trade. So for instance, let's take a look here. So we have a peak formation high in this area right here. Let's say before we even get there, previously we're going to look left, we're going to look right to see how we're going to trade left. Okay, so price has come up from in this particular area here and has come down to this area here. So we see that these levels of support and resistance, ceiling and floor, is being respected. Looking right over here, we see that price is actually right there. Price has come up and has on 3 different occasions has shown some rejection. So once we have at least a minimum of 2 touches, we have a valid level. I always tend to say that we should always have a support and resistance to make a level of support and resistance strong and valid. And we can see that once we get over to the left, we do see the same. Once resistance has now turned to support, so there is some valid strength to this level of support here. So we have the high, come back down, we broke through, false breakout, came back up, false breakout, and then we came back up here. So now here we are at this peak formation high. And what I'm going to do is I'm going to take off all these levels here, because being able to see structure without having anything on your charts, naked trading, is where we always want to be able to trade. So in between, always understand there's major structure and then there's minor structure, or what people call price action structure. So major structure would be moves that look like this, right? Now minor structure would be moves that look like this. Okay? So inside of major structural levels, there are minor structural swings, pivot points. But being able to train your eye to see these major moves and then being able to measure them out with the Fibonacci, or just being able to see them and understanding where the breaks are and where they need to break in order for it to be retested and for a proper sniper entry is key. So let's just worry about the major structural levels, and once we're able to see those, then you'll be able to see the market quite differently. So prices come down. I would use this as a nice swing. So you want to see good, nice swings. Now remember, the market's always made up of and only made up of M's and W's, as you can see. 5 swings, if you understand harmonics, Elliott wave and so forth, the market is basically only 5 swings. 1, 2, 3, 4, 5. So is the harmonics. And 1, 2, 3, 4, 5 only forms an M or a W. And this point right here, you can see clearly the actual W. You can see the double bottom right here. And this is what I say when I say that wrinkles gives you a much smoother and a better opportunity of seeing price action in a much clearer manner, so that way you know where you can take the trade. So those of you that trade the market maker methods, those of you who trade patterns such as M's and W's, these are things that you would look for. So we have the double bottom, although it's not even, this is a higher low, but it's still a double bottom. You can clearly see this is a W formation. You have the fifth leg of the W, and what usually happens at number 5, there usually is a drop. Now inside of this price action swing as well, so we have one swing here, but you can see that I'm sorry about this right here, you have price action structure inside of this one swing. So you have price has come down, has come back up, it has made a lower high, then it has come down, it actually broke this structural level here, and then it has come back up and made a second lower high. So technically you could have taken a trade once this brick has actually closed, but right now we're only speaking about major structural levels. So this is one major structural level. Price has come back up, created this lower high, and then it has come back down, broke this level of support here, and then made another lower high, and then price tanked, or as I have to say, it bled out, and there was your move. So technically, what we're looking for in this structure, you have an M formation of a major structural level. So you have the initial leg of the M, the apex of the M, and here's the second leg of the M, which would be a nice entry for a sell. But if you want to be conservative, you're waiting for the apex of the M, the middle part of the M, to actually be broken, and then a retest or second lower high here, which is the actual confirmation that you are now entering into a downtrend. And why I like this indicator here, because it's confirming that price is most likely going to start and go into a downtrend. So from this standpoint, taking only sells would be your best interest, because this is where you're going to get moves like this. And so what happens here? So now understanding that technically, because of my indicator letting me know that the move, most pips will be gained from a sell trade, doesn't mean you can't count the trend trade. If you understand structure, you can still take some pips out of there. Oh, and so let's take a look at this. So price has come down, it has come up. Let's always remember that this level here is our major swing level. So anything that is below this here is going to be considered a sell. Once price breaks above this level and retest, we have now entered more favorably into a buying trend, and most likely this indicator is probably going to get broken. So understanding major market structure, understand that this is the move here. So no matter what's going on, all in between these levels here is what is minor price action or minor structure. Okay, so again, the top and the bottom is the major line in which we want to pay attention to. Once we break this low here, we continuation down into the downtrend. If we break this high here, we most likely are going back into an uptrend, and this indicator, this peak formation high, most likely will repaint at another level. Okay, so let's get back here. So now we've made a lower high, and again we've made a higher low. Now understanding structure, being that we confirmed that we was in a downtrend, but now all of a sudden we're not making low highs and low lows. We've made a higher low. Again, here is a double bottom for our W formation price action. You can see it here. I'm not going to draw it out, but you can take a buy from that standpoint, the second leg of the W. But from a major market structure, we have a high here. We've broken this level of structure, and then we've also created another higher low. So it does seem like, okay, we must be going into an uptrend. But also remember, we are, let's say, currently in an uptrend, but the market trend, the major market structure is for a sell. And what happens here? We come up here and we come up to this level here, and it has acted as resistance. And then we have so far now recently come down here. Market's closed right now, so we're waiting to see what's going to happen. Price could easily come back up here to retest and then fall off the cliff, or price can probably make another higher low and then break to the top. So it's an if-then situation that we're looking for and what we're waiting for. But really, before we can even get into what could happen or if-then scenarios, being able to see the market from a market structure standpoint, sticking with the basics will give you an edge on entries and what the market is doing and understanding the trend per se. And so hopefully this will give you, for the beginners or just anyone looking to level up in their trading, give you an edge. And what I would suggest, I love Japanese candles. I think it's something that every trader should definitely know how to use to their advantage, because you don't have access to wrinkles sometimes if you're on the go, whether you're on your phone or whatever the situation may be. But as you can see, you do see price action. You do see what price is doing, where the trend is much clearer. So even if I was to take this back here, now we have the peak formation low, so that means that price had been dropping significantly, and then it finally dropped and made its low, and it started to seem like it was going into an uptrend. So what happened here, we have the low, we had broke this level here, we came down, we made a higher low, which is an indication that, okay, we're no longer making lower highs and lower lows. And then what happens is it breaks up, and then it creates another higher low. And then you were thinking, if you watch any of my other videos, that usually on that second higher low there would be a break to the upside, but it doesn't always happen. Sometimes it happens on the third ones, and you can see that most likely it's not going to happen on the second round, because what it does, it creates a lower high, and as you can see, this is an head and shoulders. And so what it does is it comes back down here to retest this area here, but if you notice, it's still a higher low compared to this peak formation low, and this peak formation low was not broken. And so again, if you had taken a buy here, let's say when this candle had closed, technically you only been 18 pips in drawdown before it really made its move. So the first formation, higher low, second high low did not make it. The third high low is when we see that price really made its move upwards. And this is just something I've noticed when I personally have back tested the patterns of how a price moves and when they actually move, because timing definitely is everything. If you want to be able to get into a trade, not sit in consolidation, and then you want to know what's going on, it's about the timing and your entries. Okay, so let's get back here. So again, we made a higher low, then we came back, we made another lower high, and then you may think, okay, well, we may end up going into a downtrend, and that's true. And this is the key here, understanding how price moves within market structure. So let's just go back here again. I don't know why I keep doing that. So we have a peak formation low, we come back up, we pretty much retest this area, make our first higher low. Indication, now it's time to be alert. Okay, we might most likely are going into an uptrend. Price comes up, it breaks this level of resistance, Okay, and it comes back down, creates a higher low. Great. Second move usually is going to be the move, but then it comes back up and creates a lower high. So, okay, that should tell you right there that definitely we most likely are possibly in a trend change, but it's just not ready to make that change as of yet. You have two higher lows. Usually on that third higher low, it's going to make a move. If it doesn't, it's going to pretty much go into a trend continuation. The price comes back down. You would say, okay, oh, but it made a lower low, which it did, but it did not break this peak formation low. So that is the key. The peak formation low is the major market structure that you're looking for. Price comes back up, doesn't make a move, makes a lower high. What you want to do now at this point, you want to wait to see what is price going to do in reference to whether it's going to continue in the downtrend or it's going to go into the uptrend. And you'll know what happens when it makes that higher low. So again, it's giving you the indication that yes, we still are going into the uptrend. And then what happens, you see from a major market perspective, price just jumps all the way up right here. So if we were to get into this trade at this point here, you would have came over 100 pips. 100 pips on US 30, depending on your lot size, is quite a bit of money. So if you wanted to, you weren't really for sure if it was going to make this this move up here, what you could have done, let me just move this here. What you could have done is wait for the next higher low, because we have a break of structure here at this point right here, as you can see clearly. And then what happens, it makes a higher low, and then you have the move right there. Okay, so as you can see with this wrinkle system here, you can clearly understand and you can clearly see market structure. So understand, what you want to always do is find your lows and find your highs. Find your lows and find your highs. So let's see. So this was the previous peak formation high. So we have price that come down, right? Come back up, makes its first lower high. You could have taken a trade there, and then it comes down. It does not break this area here as of yet. That's the major level, right? So then it comes back up, and then what happens, this comes here, it comes here, and then when we see the levels actually broken, this is when we start to really get interested in taking this trend. It comes back up, makes this lower high right here. So again, see the first lower high, second lower high, it didn't really make the move. I mean, you can say that like this double top right here, you can count that as just one move right here. And then what happens here? Actually, this is the third one. Yeah, no, the second one here, it breaks it. And then here it is, 1, 2, 3. This is your move right here. And oops, wrong indication. So we'll see right there. This is where the money's made. And then what happens? Price actually, again, breaks structure there, and it comes back to retest the level in which it was broken. Let's just bring it over right over in there. This actually needs to come down just a tad bit. I don't know why it's not moving. Yeah, I like trading view with wrinkles, though you have to use there we go. There we go. So it comes back down to retest. And some people actually wait for the retest of the actual level that was actually broken before they actually get into the trade. But personally, if you understand market structure and you can see it clearly from here, you could have even gotten in from this standpoint here. But definitely, this would have been a conservative entry for most traders here. Because we see a break of, there's a level of structure that was actually broken right here as well, as you can see. And so it broke through, made a lower high, so you would have been there. So this major structural level here, this is a minor structural level, this major structural level here that was broken, this would be the retest of this area, and then you could just have taken the trade all the way down till you saw the peak formation low. And let's see how many pips that would have been. Just say if you had waited for this move right here, that's about 90 pips. If you would have taken it like right over in here, that would have been 114 pips. So I mean, it's not that much of a difference. This is a 30-minute time frame. There's a certain Renko system that I use that matches the Japanese candle. So this 30 brick frame represents 30 minutes US 30 Japanese candle time frame. So I just hope that this video wasn't too long. I don't want to talk too much, but I hope you have a better idea as to how market structure looks, how to trade it, and hopefully you can take this to the next level in your trading. So until the next video, I will see you guys later. Feel free to subscribe, like, get notified. I haven't posted in a while. I've been taking care of some things, but I'm going to get back to my videos and just sharing what it is that I'm doing, what I'm seeing in reference to that. Okay? So until next time, I'll talk to you later.